Welcome back. It's 30 minutes past the hour of 10, and this is Business Morning coming to you from Channels Television. Let's talk about wealth management strategies in Nigeria. A lot of people would think that when we talk about wealth, it has to be in millions and billions. But we would listen to Damilola Hassan. She is the head of wealth management at Meristem Securities. She will tell us more about what that entails. Good morning.
Good morning.
Glad to have you with us on the program.
Good morning.
When we say wealth management, what does it mean?
Oh, wealth management is the provision of comprehensive financial solutions. It's primarily targeted at high net worth individuals because of the level of complexity of their needs, and it's practically to put together their financial objectives and then work with them, handhold them, to achieve those financial objectives at the end of the day.
So if I'm not high net worth individual, I should just switch off my television right now and say, no, this topic is not meant for me. So I'm not watching this program any longer because it does not affect me. I know that even if we have the wealthy in the society, what room do you think wealth management would have for those perhaps mid-income earners? Is there anything that relates to them before we talk about the lower cadre?
Oh, yes. Everyone needs financial planning. So wealth management is an aspect of financial planning. So you just have it as a specialization, but we all need financial planning regardless of who we are, what level we are in life. We all need to plan our finances. We all need to project into the future. What does the future hold for us? How do we achieve our dreams and objectives? There's so many things in our minds that we want to achieve, want to actualize. So we all need to actually plan our finances. So there's room for everybody when it comes to this.
Does that include personal finance in that respect? So that means everyone is involved.
Everyone is involved.
It's not just the wealthy.
No.
I'm happy to hear that.
Involved.
I'm happy to hear that. So let's now look into personal finance a little bit before we get back to the broader picture. When we say personal finance, I know that a lot has been said about it in terms of you have to save some money out of the income, invest a part of it again, and just tell us more about personal finance.
In life, like I said earlier, we all have needs. We all have dreams. We have things we want to achieve. We need to see beyond the now. A lot of times we are short-sighted. We are very much concerned about the immediate. What is the next expense I have to make? What school my children will be in? And a lot of all these things are things that eat into our finances. They are very, very important. They eat into our finances. And a lot of times they preclude us from thinking of the future. Now, if you do not make a conscious effort to set aside, to pay yourself first, you will realize that the years will pass by and then all you have left is barely nothing. There comes a time in our lives when we can no longer be active, where we can no longer move around as agile as we used to be. So you need to plan for that stage too. It's not just about the now. It's not just about what I'm spending now. What are those immediate expenses now? We have to plan ahead.
Okay, let's look at planning. In this case, how do you plan? Let's assume your income per month is 150,000 or 100 to 150,000 naira. How should you plan it from your perspective as a financial advisor?
You start from what you earn. What income is available to you? And then you immediately look at your expenses. A lot of times we have an idea of what our lifestyle should be, but we often don't face the reality of matching it with our income. So you cannot take away those two. Your expenses must be tamed by the level of income. That's why you find an artisan who earns 25 to 30,000 a month lives in his own home. Whereas you have people in the income category of 500,000, 350,000, whatever, still living in rented apartments. So it's something that happens every time. We have to plan based on our income. What do you earn now? what are your expenses? What are those expenses that you can really cope? Because it's important that you set something aside. And the earlier you begin to set something aside to take care of your future, to take care of things that are really very important to you, you will just be living by the day. You will be living from month to month, and that will not really help you to achieve your dreams.
So the challenges faced by individuals majorly is having to know what is how much to set aside as from the income,
discipline,
and the discipline to continue to set it aside, because it's one thing to start to set aside, perhaps to do for the first 2 months, then the third, fourth, fifth month you say, oh please, this money, I just need to do something about it. So the discipline is also very important. Now, are there areas of investment that you think individuals can take advantage of, especially those in the lower and mid-income brackets? We'll talk about the wealthy later on, but the lower and the mid-income bracket, are there areas of investment that you think they should also pay attention to? You made an example of an artisan who earns as low as 30 to 50,000 naira and yet has his own house already, whereas those who have as much as 500,000 naira still live in a rented apartment. So what kind of investment can they be involved in?
There are a lot of investments vehicles, that there's something for everybody. You just need to find out what it is, what applies to you. You have people who earn very little income, and what they do is what you call the esusu, the ajo, the everyday setting aside. You have that. You have people who are a little better than that, in terms of their income. You have mutual funds. Mutual funds are funds set aside by and managed by professional fund managers. It allows people to come in with as little as 10,000 naira, and these funds are managed by professionals. So if people can come in with whatever little amount they have, they can make a disciplined approach to saving within a mutual fund. And that helps them to, the discipline to set aside is achieved. And then also the fact that the investment is being managed by professionals. So you have that advantage, to you. So that takes care of whatever level of income you are. The mutual fund typically takes care of that. You can make investments in equities. You have investments in the fixed income instruments. I think what is really important is you need to establish who you are, what level of income do you earn, what are the risks, or what level of risk are you willing to take, and then what is your ability to take that risk? Because really, the willingness to take risk and the ability to take risk are two different things. So you might be willing to take risk, probably you just realize that, oh, you're 40 and time is fast gone and you really need to achieve a lot, and then you put yourself under a lot of pressure. You hear of an investment that can give you 50% returns in 2 months. You want to jump into it. You're willing to take that risk, but perhaps you are not able. Maybe your liquidity, your cash flow, so many things surround you will not allow you to take that kind of risk. So it is when you talk to a professional that they can really help you to set the difference. No matter how willing no matter how willing you are to take a risk, if you are not able to take that risk, you shouldn't take the risk.
A lot of people seems to be aware of just bonds, not even bonds. Not many people are involved in bonds, especially except those in institutional circle. But just the equities is what we invest in as individuals most of the time. We do not take advantage of the mutual funds that you talked about, maybe money market instruments. We do not get involved in that. Are there enough awareness for investments in mutual funds, which is very, very important right now?
Maybe not enough. But I know that there are a lot of financial institutions that have mutual funds. A mutual fund can be equity-based and it can be fixed income-based. So you can actually participate at the lower end, even in bonds and fixed income instruments, through a mutual fund that is fixed income-based. So you have money market funds, you have equity market funds. So the fund can. You have the real estate investment trust. They also run like mutual funds. That allows you to invest in real estate if you do not have the huge capital to go direct into a real estate investment. I agree that the awareness is not as much, because there's a lot that people can benefit from that. But I think financial institutions are also revving up, you know, in terms of their awareness, just so that it is what people know that they can take advantage of. So I agree we need to do a lot more in that regard.
Okay.
You know,
do you think that banks or financial institutions can develop products and services to attract Nigerians to invest more in that regard?
At the moment, we have a lot of products within the mutual fund space. Market. We have a lot of products within that space. But to what extent are people aware of it? Maybe not to a very large extent. A lot of times when people hear of capital market, what comes to their mind is equities, and they just take the next door out. You know, because they have the mindset that stepping into such investment brings a lot of risk and all of that, without really getting to know the core details, you know, of the intricacies of equities investment. So I think the products are there, the avenues are there, but to what extent are people aware? Maybe that's what I agree we need to really do a lot more to work on, to increase the awareness. But the good thing also is that there's a lot of activities also online. You know, you have a lot of awareness going on in the electronically. You have online access, you have online platforms now where you can participate in all of those things. So I think it's getting better by the day.
Okay, we're going to go on a break shortly, but just before then, I want to ask you, the economic environment, does it impact on the value of investments that an individual can make in any of these instruments that we've just talked about? Because if you look at the value of the Naira, which has dropped over the past months, of course, the central bank has said it has no plan to further devalue the Naira. But before now, the value was much higher. Does that impact on investments in those areas that we just talked about?
Definitely. You are not in isolation. Your investments are not in isolation. We draw from the immediate environment. So definitely the state of the economy has a lot to tell on how well your investments will do. You look at inflation. If you invest in instruments that fetch you returns that are below inflation, in essence what that means is that you do not have real returns, you do not have positive returns on your investment, because whatever returns you're getting, as long as it's below inflation, you have been robbed, so to speak. So that's just one of the macroeconomic indices. Inflation will affect you. So if you don't engage a professional to talk to you about the different assets and the extent to which you can mitigate some of these factors, you would probably just think you're fine in your horizon, and you just probably keep investing in something that is fetching you below. And at the end of the day, you find out that you are not able to achieve what you're meant to achieve, you know, with such savings, because it's been eroded. So indeed, the economy has a lot of role to play in the state of your investments.
All right, I'd like you to hold your thoughts for a minute. We're going on a break. You've been talking to Ms. Damilola Hassan. She is the head of wealth management at Meristem Securities, and we've been taking a look at how everyone in the country can better manage their wealth, whether you're the locator, mid-income earner, or you're the wealthy. You're in the wealthy category in that respect. We'll go on a break. We'll come back. We'll continue with our conversation. Please stay with us.